Welcome back. My guest today is none other than Daniel Sachs, CEO of Sensi Properties. Welcome, Daniel.
Thank you. It's a pleasure to be here. I guess we've come very full circle.
Yeah, it's been a long time.
Yeah.
So happy to have you here.
Started at our first job together. I think that was my real first job post-university.
Yeah, so Xerox, many years ago. A lot of good friends still from the old copier days.
Yeah, the only thing no one wants to buy is a photocopier.
Well, people do want marijuana now, so you've entered an interesting space. Can you tell us a little bit about your business and what you're doing at Sensi?
Sure, yeah. I'm a real estate guy. My background was in that space and have done some kind of angel investing and venture capital over the years. And moved back to Toronto about almost 4 years ago and started looking at cannabis. A friend of mine was working as a stockbroker at GMP and called me up and was like, hey, you should be paying attention to cannabis. The more I looked at it from a real estate perspective, the less sense it made to me as what was going on at that time.
Is that where Sensi?
Yeah, that's kind of where Sensi came about. It was late 2016. I invested in a couple companies, one of which was CanTrust when it was private through meeting Eric Paul, which is now an interesting thing to say as we've come full circle on a lot of issues. But the way companies were approaching their capital at that time really made no sense from a real estate perspective. They were raising very expensive cost of capital equity, 30-40% cost of capital equity, and diluting down their shareholders to buy real estate that they didn't need to own in the first place. So I tried to finance a number of properties through my old job where I was arranging financing for people. There was no market appetite with lenders. And so I launched Sensi Properties a little over 2 years ago as the first cannabis real estate investment company in Canada to help provide non-dilutive capital to these companies by either acquiring their facilities and leasing them back to them in a sale-leaseback transaction or financing the developments. That's evolved over the past couple of years as the market has matured.
So can you tell me a little bit about what you liked about the work you're doing? Interested to know.
Yeah, I mean, I'm eternally fascinated by the cannabis space. It continues to move at an incredibly quick pace. I mean, I think that pace is somewhat lessened over the past couple months as we've entered into this market doldrum. But, the speed from a regulatory perspective, news perspective, it was going at a breakneck pace for the past couple of years, and that was extremely fascinating to me. The more I learn about the plant from medicinal properties and that kind of facet of it, I find very interesting, and just the business opportunity and figuring out how to navigate through this mess of an industry from a regulatory perspective and everything else is just eternally fascinating. I mean, I wake up every day and I'm excited to be in this industry because it's so challenging and so fun and so new.
Good to get up every day excited.
Yeah, for sure.
How has the market been receptive to your ideas?
Yeah, I think it's been an evolution as so real estate deals in the cannabis space compete with all other types of capital, right? So as investment banks were very liquid previous to launching my business, it had been very dead for capital raising. And so it was a really great time to launch the business. And then when I launched the business, the fundraising from a bank level just exploded. So people could raise overnight, they could raise $30 million in a day. And so it became very hard to compete at that time. So there wasn't quite as much resonance of the message, and it was a harder kind of uphill battle. And then as the market tapered off, that changed. Then, banks came into it. It's an evolution. If you look around, though, at other mature industries, the operators don't own the real estate. The movement of the real estate off the books of these cannabis companies is an inevitability. It's not a question. It's just going to end up there.
So would you say what you're doing is more important now than it was, say, 2 years ago? Or how does it play as far as timing goes?
I would say so. I would say I was probably a little early in the market. I was the first in the market, and I think people thought I was a little insane.
First, right?
Yeah, people thought I was a little insane when I started it. But
well, you can always say you're first. That's a good one.
There you go. Yeah. No, it's becoming more and more prevalent as a form of financing, especially as it becomes harder and harder to justify raising capital to put into real estate for these companies as we move from a market which is based on hype, let's call that, like funded capacity and all these other terms that were kind of out there, all these other metrics, to something that's more EBITDA based and earnings based and operational execution.
Okay. Now, as far as the future of real estate, maybe you want to speculate. What are we looking at?
From a cannabis perspective? Or?
Yeah.
Yeah. I think we're going to see, like, there were a lot of, we're going to see more and more financings happen in the space. You can see at a larger macro trend, there's more players entering the space, especially in the US. It's starting to become pretty crowded. You had MedMen spinning off their Treehouse REIT. You had Acreage, I think, spun out one of theirs. And a couple of the other MSOs have spun out large REITs. Inception REITs raising a REIT in the States. So there's a larger prevalence of that. Within Canada, you've seen this evolution, right? So everything was about indoor and let's call it sub 40,000 square feet when I was first looking at the space. Then it became indoor, and you had to be like 300,000 square feet of indoor. That was the thing. Then it moved to greenhouse, and it was like you're going to be, okay, we're a 400,000 square foot greenhouse. We're going to be competitive. Now it's, okay, we got to be a 2 million square foot greenhouse. And then all of a sudden it's like, okay, cultivation is, the banks are coming out, and Matt Bottomley from Canaccord came out and said basically cultivation is dead in Canada, and you saw this pivot. It's like, okay, cultivation no longer matters. We're building out this extraction facility. We're building out a beverage facility. And so the uses of real estate, of how these users are approaching space, changed. I think one of the other macro trends you're seeing, and there's been this great story of community revitalization, right? As they've gone in, and you look at what Canopy did in rehabilitating the Hershey's factory and a town like Smith Falls. The other side to that is it's really hard to finance those properties because they are in small towns, right? If you built if you built $100 million factory or a $300 million factory in a town where the next nearest most expensive property is like $10 million, it's pretty hard for a lender to look at that and be like, okay, this value makes sense, because if that tenant's no longer there, then it's arguable that that property is only worth $5 or $10 million, even if you've put $300 million into it. And so that's kind of one of the challenges. And the other thing we're seeing in that trend is these companies are having a challenge scaling their labor forces in these small markets. So I think over time you're going to see...
Not everyone wants to live in a small town with
like
just the other employees at the company?
Leamington has already eaten up like all available labor in that area, right? And the pace at which, unless they're able to replace all these jobs with automation, which they're not, because it's, as you know, cannabis is like a very high skilled, requires like a highly skilled labor force, a lot of PhDs and stuff like that. You've got to keep attracting more people to that town. And I think you're just going to see more and more facilities, as new facilities are built, move towards urban markets, right? It was a bit of a chicken and egg thing before, where companies couldn't get financing, so they found cheap land and cheap buildings in faraway places. And now in today's market, I think it's a lot about, how can we create a sustainable business? Where is the right place to locate? The same way any company would look at it, any modern company would look at it. Where do we want to locate? Where we can be competitive? And where we're often competitive, you look at like the whole Amazon fiasco with their whole search for a new headquarters. It was about a highly educated workforce, a flow of employees, of services and other things. And I think you're going to find that in major markets. And that will inure to the benefit of the real estate players, because it's obviously easier to finance something or raise capital for a deal in Toronto than it is to raise capital in nowhere, Ontario.
It's not the old build it and they will come out to the middle of nowhere and work for you.
Yeah.
Or you'll have to pay them quite a bit more probably.
It's a challenge. I've looked at a number of properties that are in kind of small markets, and on a deal perspective, it looked really good. It's like, you've got this really cheap building, maybe we could do something, and you scratch your head and you're talking to the LPs, and it's like, well, how are we going to staff this thing?
Right. Unless it's up in cottage country, then...
There you go, yeah.
Right. Okay.
Well, I think you'll see smaller lifestyle businesses excel there, and people will be able... There are companies that are able to solve the staffing challenges, but for some, it's a fundamental problem, right? Like, if you can't staff a business...
That's an issue,
that's
for
an
sure.
Issue, yeah.
Can you talk a little bit about the companies you invest in?
Yeah, yeah. So outside of like the real estate side, I've
Sure.
invested in a number of companies in the cannabis space. I guess the first was CanTrust. At that point, looked
Yeah.
like the most promising medical company in the world. Obviously, we've seen what's happened
Yeah,
to that.
it's taking a little turn.
My timing was not bad on it, but
That's good.
outside of that, I've invested in Strain Print Technologies, which is a medical technology company for tracking efficacy for cannabis. So they have an app, the Strain Print app, and users can track their cannabis sessions and allows them to use cannabis more wisely. At the same time, they've built the largest medical database of medical data in the cannabis space, and they're able to help companies approach clinical trials and
it's Strain
research
Print?
more effectively. Yeah, Strain Print Technologies.
Okay.
It's a Toronto-based company. Another one is Boozer or Super. Boozer or Super is Boozer is an alcohol delivery platform. They partner with Foodora nationally to deliver alcohol, and Super is the cannabis end of that.
Okay.
So it's a digital marketplace, an app-based marketplace.
They deliver cannabis to your door.
Yeah, so they're within a legal, regulated way.
Right.
There's lots of services that do it illegally right now, but they'll be rolling it out, I believe, first in Manitoba and Saskatchewan.
Sounds good. Sounds like some companies to check out.
Yeah.
And maybe we'll just wrap up with what are your thoughts on the whole vaping issue?
Yeah, I mean, it's a big challenge, obviously.
Yeah.
I think it's something the industry is going to have to navigate. There's a number of problems with it. One, I would say, is you've got this drive for companies to outsource all these parts to China. So most of the vape hardware is made in China. So aside from batch testing a single one and sending it to a third-party lab to be verified, they have no idea what's in this hardware. There's been lots of documented cases of stuff, including heavy metals in there and lead and mercury, stuff you don't want to be inhaling. I had a chat with a large tobacco company about maybe 8 months ago, and they were telling me about all the additives that a lot of their competitors used in vaping, like the clouds, when you see people puffing these big clouds
You see them.
of nicotine vape.
Saw one this morning.
Yeah, a lot of that. So that's like the same stuff they put in smoke machines. And that's,
Really?
And that's like what gives
I wouldn't
you
stand
like,
in front of a smoke machine for very
and
long.
inhale it. No, yeah, like that's the same thing that gives you popcorn lung, essentially. And all of these additives that are made, like the e-juice, is made in China, right? And it's heavily commoditized, so it's not about creating a quality product for people. So I think it's a real problem, and cannabis companies are going to have to be thoughtful in their approach to separate themselves from that, and to ensure that there is, because right now vaping's pretty unregulated on the nicotine side.
Right, the wild west
Wild
of vaping.
West, yeah. So on the cannabis side, I think if you don't want to get dragged down in that mess, you're going to have to be very prudent as to how you approach it and show that like what you're creating as a product is very clean and is kind of well designed.
Okay, well that's all the time we have on the show today.
Perfect.
SensiProperties.com. Daniel, really appreciate your time, and I look forward to doing this again.
Thank you, Mark. Always a pleasure.
Absolutely.